In 2016, Trump won the presidential race over Hillary Clinton and became the 45th President of the United States. During this video, we'll discuss how this victory has affected the U.S. financial markets and economy, identify how interconnected Malaysian and U.S. financial markets are, then we'll discuss how Trump's victory has affected Malaysia's financial markets and economy, and finally, if his victory is a blessing or a curse for Malaysian capital markets. Trump hasn't been president for a very long time, but he has implemented both tax cuts and deregulation of the market. Now, both of these increase prices of stocks and bonds, which increases the demand, and these can be seen as expansionary policies that will allow the economy to grow. However, in the short term, we would have seen a loss in the market, as those who invested in the interest of a Clinton victory would have lost out. As well as this, Trump's tariffs on imported goods will cause the local prices to drop and increase the value of the dollar. However, local policies by Trump may affect the country's productivity. For example, the slashing of welfare means that people who cannot afford healthcare will remain sick and be unable to work. This lack of productivity will cause the value of the dollar to decrease compared to other countries such as China.
Malaysia's financial market is highly interconnected with the United States. We can see it from the 5 different aspects, namely the stock market, bond market, exchange rate, derivative market, and foreign direct investment. In the stock market, there was once the Dow Jones Industrial Average slumped for more than 54% in a crisis, which directly caused Malaysia KLCI to drop below 1,000 points. Next, from the bond market, we can see that the 10-year yield curve trend of both countries are showing similar patterns of ups and downs, which shown in the assignment. Furthermore, the foreign exchange market in Malaysia has emerged from a daily transaction of $2.3 billion in 2005 to $10.8 billion in 2012. Furthermore, in the derivative market, the crude palm oil contract has made available to trade on Chicago Mercantile Exchange as a result of agreement between the CME and Bursa Malaysia. Lastly, the foreign direct investment in 2008 crisis has plunged over for a total of 98%, which directly caused the net reserve of Malaysia to fall. Therefore, these 5 factors have shown how interconnected Malaysia's financial markets are with the US.
On the 23rd of January 2017, Donald Trump declared the abolishment of TPP, which is the Trans-Pacific Partnership. At the same time, he decided to increase the import tariffs for all Asian countries to protect US industries. This caused 10% of total Malaysian exports to be affected significantly by this decision. After the US presidential election in January 2017, the Malaysian ringgit depreciated from RM420 to RM450 to $1. This caused the overall food price and cost of living in Malaysia to increase.
Moreover, capital outflow in Malaysia had hit a new high in January 2007. The depreciation of Malaysian ringgit had caused investors to reshuffle their portfolio in investment and caused the FBM KLCI fall by 3%. But at the same time, Malaysia also attracts capital inflow mainly from Japan and Singapore due to low competitive costs and the strategic location connected to the center of Asian market.
First, political uncertainty in US bring inflow of capital into Malaysia because in short term, risk-averse investors may increase the investment in Malaysian asset due to the risk of US asset. Consequently, increase in demand for Malaysian asset may also cause a rise in foreign direct investment. As FDI has a direct relationship with capital market, Malaysian capital market will grow positively in both short term and long term.
However, as Trump abandoned TPP on January 2017, this caused exporters from Malaysia to pay for high tariffs to export to the US, and that may decrease their income. Some investors will sell off their stocks as they believe that the drop in companies' income may result in drop in dividend yield, and thus causes stock prices of export companies to drop due to surplus. Eventually, Malaysia's stock market performance will be negatively impacted in long term as most of the companies in the stock market relies on exportation to US.